the market, Brian, will continue to go through all of that. But we have had a number, as I said, in the weeks prior, of targets come down. You still have Oppenheimer, which is at 7,100, and you have some 6,800s. But to Jenny's point, 6,600 at this point, 900 points on the S&P. I mean, that sounds like a lift. It sounds like a lift. Now, the other issue I raised the other day is it sounds like a lift today in the messiness of tariffs and trade wars and all the other stuff. Does it sound like a lift if you get to the good stuff later on? Tax cuts, deregulation, deals, all the things that we came into this year bulled up about?
I think so. And we remain at 6,700. Nobody believes us. And the more people that cut their targets, the better. The more Jenny talks about how she doesn't like anything, the more bullish I get. If you take a look at post-Great Financial Crisis earnings, we're still above those earnings numbers. Down 2% is nothing. If you take a look at the 500 stocks in the S&P 500, we've seen zero negative revisions for FY2. If you look at energy, up 10%. Energy, consumer staples, utilities have been more of a momentum trade, just as Europe has been. I don't buy stocks based on price. I buy stocks based on fundamentals. How can energy continue to maintain its positive performance if WTI is going to be down? 95% of the time when WTI is neutral or down, the energy sector underperforms the market. That's where we're going at the end of the year. So guess what? Our theme remains resolute. I'll quote the great philosopher Ricky Bobby, where he said, if you ain't first, you're last. Meaning we were the first people to put out our target number. We're not changing it. Everybody else is going to change their number back up again when the good news comes in. We have been underweight the Mag 7, overweight the constituents of the three sectors that make up the other stocks in the three sectors that make up the Mag 7. That's why our stuff's outperforming this year, and that's why I think our portfolios will continue to outperform.
The good stuff is coming. I'm with you. How do you get to 6,600 without the Mag 7? Because to go to 6,600, I'm telling you that the Mag 7 are a screaming buy right here.
Well, NASDAQ's down 300 points,
Certain
almost 2%.
parts of the Mag 7 are screaming buys. But how did the market go?
You need.
I disagree, and here's why I disagree. Because if you take a look at the performance of the Mag 7, Joe, as you know this, in the fourth quarter, they actually underperformed. What outperformed in the fourth quarter? Small cap, financials, things that have not been working. So I think that we're going to see massive rotation still into the areas that have been oversold, that aren't necessarily in Mag 7.
Even if we're asking ourselves whether this is a slowdown in the economy or something worse, like a recession. The reason why that all worked
there are no signs
is we didn't have recession questions then.
There are no signs of recession.
That I agree with.
There are no signs of recession.
Are there signs of slowdown?
There's not no signs of
yes.
There are no signs of recession.
There's signs of slowdown, though. There are.
A slowdown is not a recession, and a 10% correction is not a bear market. We're acting like it's a bear market, and it's not. We're not seeing substantive signs in the economy of a recession, period. Oh, by the way, Powell said that, too. So is he wrong? Are people wrong? They're seeing the stuff that is not bad? And the answer is
why is the Russell down 7% on the year?
Because the Russell, there's 400 companies in the Russell 2000 that don't even make any money. Guess what? The other ones that do make money are actually really, really good companies. So it's not about buying the index, it's about buying the company.
And by